funding. Call or text Angelo Christian, 832-431-6331. Reach out to us if we can help you. Angelo, your nationwide direct lender. Appreciate everyone watching the show and the channel this evening. Hope everyone's doing well there. Ooh, crazy. And if you guys saw a major, huge update, man, the Fed actually cut the interest rates a 0.5% for the first time in 4 years. Massive drop. A lot of people were thinking it was just going to be a 0.25%, but a 0.5% drop is a huge interest rate cut. And we definitely need it for mortgages, commercial loans, hard money, private lending, banks. You know, the Wall Street Journal Prime adjusted downwards today. So far. So all of the major indexes have adjusted their interest rates downward. And it's a huge boom. We think just be ready for what's going to happen in the real estate and the mortgage market in the United States. That things are going to take off, and there's going to be another massive boom. I don't think the Fed's done cutting interest rates. I expect further cuts to happen. But this is the sign. This is the momentum for things to happen. So be ready, because I think that you're going to see more interest rate cuts in the future. Is my prediction. So um, yeah, and please don't forget to subscribe, like that bell, enable notifications, give us a thumbs up, pass the information out to whoever you think would benefit. We're a direct nationwide lender. We've been doing this now for over 20 years. We do commercial, residential, private lending, hard money. So anything that we can do to help you, please let us know. That's the big thing that I wanted to talk about tonight, because it's a whopper. I mean, a 0.5% cut. You think about, I mean, how many people are going to start refinancing that closed on their loans in the last 2 or 3 years? We have people that are reaching out to us. Hey, Anthony, what's up? Appreciate you, brother. Good evening, Kevin. Thanks. This is just it's just a little Arturo Fuente. So just a little Corona cigar. So it's hot though, man. I'm sweating. You see, I'm sweating. Too hot in Texas, dude. So I don't know where you're at, man, but hot down here. So thank you, brother. I hope you're doing well. Appreciate you, man. Oh, I was in Augusta. Is that where they do the is Augusta where they do the movies? Walking Dead and all that? Is that Augusta or Savannah? No, that's no, that's not Augusta. That's what part is that where they do the Walking Dead and all that and Vampire Diaries? I forgot the name of it, man. I was over there a few weeks ago. We passed through that to go to South Carolina. Oh, the Masters. Oh, that's right. Yeah, that's right. Okay, yeah, yeah, yeah. Yeah, Georgia's a great state too. It's not. It doesn't get as hot, I think, as in Texas though. But Georgia's a good state for business. Great state for real estate. I love Georgia too. Georgia's a really good state. So, but anyway, so going back to what I was saying, so this is the deal. With interest rates coming down 0.5%, you look at, for example, if you're buying a $500,000 property and the interest rate was 5%, and now it's 4.5%, that payment difference is going to be $250 per month that you're going to be saving. So it's a huge difference, because that's $3,000 a year that you're going to be saving on your interest, and especially if you're buying rental properties, you can get you're gonna increase your cash flow, your NOI. So all the conventional loans, the FHA, the VA, the USDA, they've adjusted their rates downward as a result. You can get 30-year fixed mortgages right now at 4.25. So rates have gone down. It definitely makes sense if you've gotten a loan the last 2 years and your rate is over 7%, you should look at refinancing. If you can save if you can save 2% on the interest rate, it makes sense to refinance. Oh, Walking Dead. Yeah, but there's an area, I forgot the name of it now, where a lot of those movies are filmed, and I can't. My wife and my kids know where it's at. I forgot the name of it. Because I really don't watch all those shows. Um, but it's like where that Vampire Diary. I don't know the vampire show that the kids watch. So can't think of the name of it. But anyway, um, so that's the big thing is, yeah, interest rates drop. It's a great time to get in the market. And like I said, I think that rates will drop further. Remember, if you buy a house right now, you can always get a streamlined loan refinance and then refinance your loan later. So if you find a great piece of property right now that you want to get funded for, we do nationwide commercial, residential, private lending, hard money. We do investor no doc asset based loans. Investor, you can buy. I was helping an investor before this show this evening in Tucson, and she's buying the house. It's worth 550. She's buying it from her mom for 250 because the property has over 200,000, actually 300,000 of equity. We can use that equity to roll in the down payment and the closing cost, and she's getting 100% financing. And that's a no doc loan. You don't need credit, no income. It's an asset based loan. So that's just an example of some of the really creative things that we do. We also do investor lines of credit. A lot of investors, they're looking for lines of credit, especially right now, to tap into their existing equity to purchase additional property. So if you have rental properties, for example, and you want to pull a line of credit out against those rental properties, you can. An example, let's say you have a property that I was helping a guy. He was in Tampa, and property was worth like 1.1 million. He owed 300,000, and he had a first mortgage on there like a 2.9 rate. So he didn't want to refinance the first mortgage because the rate was so low. And I agree with him. I wouldn't do it either. But what I told him was, well, why don't you do a second line of credit? We can go up to 800,000 or give you 500,000 on a credit line, and then you can take that because on credit line, the thing I like about it is that you don't pay interest on it because you're not drawing from it. You only pay interest when you draw. It's a revolving credit line for 10 years, and you can use that if you want to go invest and buy more rental properties instead of taking out a loan on the new property. You can get a line of credit on your existing property to purchase the other properties. So it's just an idea, strategy, a really good one if you have equity in your property and you want to tap into it. A lot of people, they don't want to refinance their first mortgage if they have a very low rate. So this is a way on a strategy you can get a second line of credit um, to purchase additional properties, and that's what people are doing right now. They're finding deals. Oh yeah, Covington. That's right, Covington, Georgia. Yeah, thanks, man. I knew. I don't know why how I forgot that name. Yeah, Savannah's really pretty. Covington. Yeah, Georgia's just a great state. Florida is one of my favorite states too. You know. Yeah, it was a cool little town. Um, I've heard people say that Savannah's really pretty. I haven't spent enough time there though, but people say Savannah's a really pretty city. So and then obviously you got um, Alpharetta. I've seen a lot of business in Alpharetta, Duluth, uh, Decatur, I think. Um, it's a good state for business. So, and I've been lending there since like 2008. So, yeah, definitely. And the property value still makes sense. That's another good thing about Atlanta or Georgia is the property value still makes sense. It's not like LA, or New York. Yeah, I think in at Georgia you got a lot of upside. Usually a lot of the houses have land and acreage. There's a lot. I mean, one thing I was surprised about Georgia is how the tree density. I had no idea there's so many trees in Georgia, and a lot of the homes have a lot of land, or the ones that I funded. So I think long-term values. Georgia is a great state to invest in. I think Texas. I mean, if you ask me, some of the top states to invest: Texas, Tennessee, Georgia. I think Oklahoma, Louisiana, Alabama. You know, Mississippi seems to be a good state too. I think a lot of the southern states like Southeast, you're gonna see a lot of good stuff. That whole southern eastern section, I think there's a lot of good opportunity. The Carolinas are good too. So, but yeah. And then, like I said, they so the big thing tonight is the interest rates have dropped. They've come down. We're excited about that. We expect further rate cuts. That means cheaper rates for you, cheaper payments, more affordability. Credit card rates go down, car payment rates, student loan rates, mortgage rates. It's all gonna. I hope that we start to see a domino effect. They want to keep inflation in line around 2%, but cutting the Fed funds rate by 0.5%, I think was a big move tonight. Um, what subclass, Anthony? Um, I'm seeing a lot of well, I see a lot of Section 8 housing, and then I see a lot of multifamily activity. It seems like Airbnb's kind of dying a little bit. I don't know if the local authorities are kind of trying to shut down Airbnb, but Airbnb seems to be less like from like 2019 to 2023. Airbnb was really hot. Seeing a lot more Section 8 um, being produced, and a lot of people going after multifamily or ground up construction. Um, and what I mean by ground up construction, one thing that's very interesting that I like is instead of fix and flip or build to sell, they're doing build to rent. So a lot of these investors, what they're doing is they're either building multifamily or townhomes. I had a client that did 38 townhomes, ground up construction, and they're just going to keep them and rent them out. You know, he couldn't find any properties for sale, so he bought the land and developed it himself and built it. And the income on that was like $1.8 million a year. So a lot of people are doing that. Obviously, you have to have a sophisticated team to put that together. But I think it's a hell of an idea if you can put it together. Yeah. Well, I have a buddy of mine that actually does really well with Section 8 here in Houston, and he has a in downtown Houston by Reliant Stadium. He has it's like it's a 30 unit, and it's worth like 3.6 million. And he does a mixture of Section 8 um, with standard rental. He says that it's good to do a mixture of like regular, leases or rents and standard Section 8. He said it's not good to do all Section 8. I haven't done any Section 8 personally, like for me that I own. I've only financed it for people. I finance Section 8 for a lot of people. Um, but yeah, you're right. I mean, you get the guaranteed income, and I think that's a really attractive thing. You know, if you can, I think it's a long term play. and you can build wealth slowly with it. And it's just because it takes a while. You got to find the property. Like he's been in this deal for going on 3 years, and he's just now starting to make money out of it. So, and he bought it all messed up. It was a slum, torn down crack house, and he had to redo the whole thing. So, you know, um, but and of course everyone's story is different. I'm just giving an example of one example here of how he did. Some people they got a whole system down. They got thousands of properties, and they got everything. But the idea of it, I think it's a great idea. Yeah, I think it works really well. We finance. We do DSCR. We do investor cash flow. Um, for investment properties, at least 10%. Now, if you do hard money, like an asset-based no doc, like the one I was talking about earlier, if the property's got, you know, let's just say 40% or more equity, you could get 100% financing. Like the one I was saying earlier, the mother buying it from the or the daughter buying it from the mother, you could get 100% financing on that. But if not, you're going to be at least 10% in. So, I mean, we do them. We do asset-based, hard money, bridge, DSCR, investor cash flow, fix and flip, ground up construction, you name it. So, but yeah, if I can help you guys with anything, just let me know. I mean, I appreciate you all watching the show and the channel. Um, you know, we're open 7 days a week. Call or text us 832-431-6331. We lend nationwide. It depends, Anthony. It depends on the product. Like asset base has no credit score requirement, but if you're doing like conventional DSCR, you got to have at least a 650 credit score. But hard money asset base has no credit requirement. So it just depends, my man. So, but yeah, I'm glad you guys. Please don't forget to subscribe, enable notifications, share this with anybody out there. Call or text us if we can help with any funding. We're direct lender. We're here to lend and make loans to you guys. I want to make sure that we're very clear. We're not just a marketer or YouTuber or whatever. We're here as a lender for you guys to give you money. Appreciate you, Anthony. Take care, man. Stay safe in Georgia. Appreciate all of you guys watching the show and the channel. Call or text me if I can help anything. Go watch football and spend time with your family. Enjoy it. Take care. Peace out. Call or text me if I can help you. Um, call or text our office 832-431-6331 to touch base. Appreciate all of you guys watching the show and the channel. Yes, take care from Michigan. Love Michigan. Y'all take care. Peace out. Stay strong. We'll see y'all next week. Later. Bye-bye.